Good evening, ladies and gentlemen. The time is almost 1:30. It is the 8th of September, and today is a Wednesday. And generally, on a Wednesday, you see a pretty good fall off in options premiums because the next day is the expiry. And more or less, we were sideways for the entire first half. Into the second half, was expecting some kind of volatility at least, which is why I was trailing my stop loss very close with about 2 points. I took that 2 point exit, and plan was to take re-entry at a point where it will dip beyond what people expected to. The idea was, okay, people expect a bounce from 17,300. Instead, most likely it will dip below that and then probably bounce from there. I wanted to get a very ideal entry into the trade. I didn't get it. I missed the bus a little bit on it. So I'm more or less calling it a day from there. All said and done, it looks like right now whatever strength was there in Reliance has been short-lived, because after that strength, it's while it's holding above breakout levels, it's not exactly showing some kind of a continued breakout. There is no fresh buying that's coming into Bank Nifty. What is happening is at different points we're seeing Bank Nifty stay relatively weak. You see a lot of short positions build up, so you have a short covering up move, and more or less you consolidate there. There probably has to be some big trigger in Bank Nifty for it to head higher, and we'll need banks like Kotak, HDFC, Axis, these to really pick it up to do that. So, and IT, more or less now one can say that after this rigorous up move that we've had nonstop, is holding at least at the higher levels and consolidating, not making too much of a move. So yeah, I guess one can now fairly assume is that in this tremendous up move that we've seen, we might continue to consolidate for now. That's how things look. I'm not one to call tops or bottoms. Even then, it doesn't necessarily have to mean that we will see a correction anytime soon. Everyone seems to be hoping for one, so it'll probably take a long while before we see something like that. So all said and done, I hope you had a good trading day, and I will catch you tomorrow for the expiry. Take care. Bye-bye.
Want to meet like minded traders and discuss option strategies, adjustments, and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. The time is 9:30, and we've opened slightly negative. IT looking weak right at the open. There should be support at lower levels in this region. Bank Nifty is surprisingly an outperformer to the rest of the Nifty pack, which is surprising because Bank Nifty has been relatively weak this entire time. So that being considered, yesterday booked a profit of 3,45,000, which is why my mark to market at close was slightly negative because I'm carrying this in Reliance position. And this morning entered 300 points triangle, and I've kept my sizing low so that in case it doesn't work out so well, I can convert this into a calendar and hold it overnight. So if there's a lot of volatility. Regardless, we've just opened, and from the open interest, at least the initial few changes that are evident, there's a lot of positions building up around 17,350 and the range of 17,300. So yesterday as well, we saw a lot of this 17,300 and 17,400 starting to build as the viable expiry range. And going by the premiums that are available at those strikes, we can say about 85 points in either direction of that. Roughly, we can still keep the range, the broader range of 17,200 and 17,500 holding, unless there is some kind of big short covering that is triggered. And yeah, I'll keep you posted. The time is 9:34, and as of now, sitting on a 300 points triangle, which is delta neutral and 17,350. The time is 10:40 almost. Not a lot is happening. We've just been holding sideways around 17,350, and more or less the OI data continues to show heavy writing of this 17,400 call option, and at the same time 17,300 put option is also being written to a good extent, and 17,350 straddles being created. So right now, just want to cover one thing, which is, after a breakout and after adjusting my Reliance position, I'm still retaining a slightly negative delta Reason for that is, so some people are like, why don't you make it a little bit bullish? Because there's a good chance we do at some point during the month pull to 2500, where max OI is starting to build. I'm also of the same view, but I'm holding shares of Reliance, almost 1200 shares. So I'm considering that also part of the equation. So in case that up move comes, it's really going to be with the fact that my shares also benefit. This was initially a covered call position, so should not forget that. And that's why I'm keeping a little bit more of a buffer. I don't want to have too aggressive protection on the upside as of yet. And HDFC cover for the shares is basically doubled. Basically, anything that I sell a covered call for, most people should buy those calls. They will most certainly double. But jokes apart, not going to do anything. It's fine. I'm going to let this be. I'm not expecting me to have to manage it as of yet, but I'll wait and see if I should roll forward or leave it as it is as the month starts to go by. HDFC Bank as well, not a lot happening here. It's at cost. Larsen has been at the money. So 1700 call that I have as a cover has been at the money almost for a while now. But yeah, no need to roll it as of yet. And the remainder, because I have to understand that my shares that I've gained, it's all paper profit. It's not like I've booked it. So if I roll this now and give up some credit, then in case there's once again a downtick, my shares give up and my calls really have nothing. And yeah, that's about it. Times 1040, as of now nothing is happening. My plan is if either of these two options now head to the day's high, I will be squaring them off and rolling them away. So this about 23, 24 would be its day's high on the put option, and yeah, same would be for the call option. I think about 21, 22, something like that. Yeah, right at the beginning, about 21. So if either of them heads to the day's high, then I will square that off and roll it higher. And in conjunction to that, I might also roll away the other side as well. It all depends really on what is happening. And it's like a lot of ways you look at it is, okay, I entered this at 22 plus 15.5. Let's say 27 change, 27 and a half. Yesterday at closing, this was probably worth something like 43, 44, 45. Let me just check. So this put option closed at 20, and the call option closed would be higher at 20. Okay, fair enough. It's still closed for about 4 points higher than what I entered it at. Why can't I carry a trade like this at relatively lower sizing? So the reason I don't do that is because what I stand to gain, those 3 points or whatever, I personally don't believe it's worth the kind of overnight risk on an unhedged trade like this. There are many people who are comfortable and carrying large amount of exposure with, generally, if you're on the credit side, not the best risk to reward. I'm not one of them. I don't mind the fact that my risk reward is low during the day, but at least I have the ability to do something or to get out of my position. I don't like carrying such risk overnight. Most likely, if we hold range for the entire day, I'll be taking the same position tomorrow for the expiry, quite likely. Despite that, I mean, why not just carry? I'd save on the square off, I gain from the overnight decay, and there are so many benefits to it, but it just goes against like my personal approach to trading. Even with lower leverage, lower sizing, I would never take like absolute naked exposure like this, at least not at a single strike. If it's a very high IV environment and I spread myself properly across different strikes and I'm using only, let us say, 20, 30, max 50% of my margin, then I would consider something like that. But using 100% of my margin, taking a fully naked overnight risk, that's not something I would ever do. Right now we're having an up move, and let's see. It's been a pretty large amount of call writing at 17,400, so I would be a little surprised if we very easily get past that, but it is possible. And considering that this position is almost at now an 8 point mark to market gain, I'll also try and trail a stop loss and call it an early day in case I start to lose about 4 points from here. Okay, the time is 12:30 and more or less we've held range the entire day. Now there's a little bit more weakness coming into Reliance, which is heading to the day's low, and IT as well has been pretty weak. Bank Nifty showed some strength into IT weakness, but as of now we are making a dip. Currently heading back to the day's low on the Nifty. This being the case, what I'm planning to do here is trail a 2-point mark-to-market stop loss and take an exit, because I'm sitting on a good close to 11 points of what is my mark-to-market gain, and I would not want to give up much from here. I'm expecting the same thing to continue, that we will consolidate, and worst case scenario probably take a bounce from 17,300. But into that, I neither want to collect additional call credit, nor do I want to restructure this trade in any way. I will just wait and see. If we head all the way till 17,300, most likely my exit will be hit. And roughly when this expands to about 18.5, it will be at around 10 change, is where I think my exit will happen. So I'll keep you posted. It's just about halfway into the day, and so far we've really not had anything happen. A little bit of role reversal on the Nifty and Bank Nifty from the past 2 days, and yeah, I'll keep you posted. Okay, breaking the day's low, and more or less was sitting at about 10 points of DK, and we'll probably most likely make a test. Oh, okay, it's an MIS. It's unfortunate. Okay, so that's about it. I've taken an exit mostly because we're breaking the day's low, and we're going to most likely test this 17,300 and then probably bounce from there. And there's a good chance that both of these options actually end up closing below 10. But there might be some amount of volatility. We've been very range bound for the entire day, and finally after being range bound, we're now broken. So I could head all the way up till here and then take support, but that would lead to undue expansion on the put. The call is not particularly going to compensate to a large extent, and at that point I'll have to basically just sit into that IV spike. So what I will do instead is I will see if there's an opportunity, and this depends, this re-entry really depends. If we make a good 20-30 point move below 17,300, if we start testing here for the slightest and we're able to break this, and I'm able to sell this put option for something like 25 plus when there is a panic kind of covering on people who are short, then I will use that as an opportunity to re-enter. But apart from that, yeah, from where I was, so I take a 2-point trail and have to respect it. So okay, missed the bus a little bit because the idea was wait for 17,250 to get tested or broken, and short the 17,200 for something like 40 is what I was going for. It didn't really get to that price, and nor did we test 17,250. We just about entered the 50s and exited. It was a very short time frame, and at that point the bus is missed because we're seeing a bounce from there. So I'm more or less going to call this a day now, and because after the dip and the bounce, both the calls had given up a lot of value, they haven't given much back, and the puts crashed like anything. I think crashed about 50%, and I mean, not 50%, but like 30-40% in that single 5-minute green candle that we found. So went from 35 to 120. So there's not going to be much more opportunity. I guess it's fair enough. I could have entered my position in parts, but the idea was to wait till 17,250 is tested and bounce from there. As far as open interest, what this did is into the move, a lot of call writing took place at 17,300 and above, and once again we might see some kind of a big short covering the same way we did yesterday. Also, a lot of people took sideways positions around 17,200 and 17,250 to protect their downside on positions which would be bleeding as we were heading lower. And now these guys also will have to cover, because now this position will start hurting into the up move. All said and done, I'm going to call that a day. And yeah, I will catch you tomorrow for the expiry trade. I hope you had a good trading day. I hope you were not stuck in the slide and got out in time, or at least you managed to time your entry back very well. I missed it by 5 points maybe. Yeah, just about 5 points. Regardless, thank you so much for watching. I will catch you tomorrow. Take care. Bye bye.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.